Okay, so we have come a long way in this stock trading course, and before I end, right, I just want to share with you a few stock trading tips to get you started in your stock trading career. The first tip that I have for you is don't chase the markets, right? Doesn't matter whether you're trading stocks, forex, or futures, right? As a trader, as new trader, right, there is always this urge in you, right, to chase the market where the market breaks out higher, the candle is so big, it's so bullish, and you want to buy, right, because you think that, man, right, it's going up forever, right, and if only I can just catch a piece of the move, right, that's what you probably think. And trust me, whenever you see this type of price action where the market is hugely bullish, right, candles are big, right, that's usually the worst time to enter the trade. So that's what I mean by don't chase the markets. So if you want me to give you a visual illustration, it would be something like this. Markets, say it's a range, then it breaks out higher like this, goes up here. Then you're tempted to buy at this highs over here because the market is so bullish, the candle is so green, right? It has to go up some more. Then you'll think to yourself, man, I'll just get one small piece of the move. That's all I ask for. And trust me, when you buy over here, that's usually when the market collapses. Maybe it does a pullback or it reverses completely. So really, right, first tip I have for you is that don't chase the market, really. Okay? Second thing I have for you is start small. So I don't know how much money you're going to start with, right? Maybe you have $50,000 to speculate in the markets. And my suggestion is don't risk that full $50,000. I mean, when you trade stocks, right, you don't need $50,000 to get started. I think nowadays with the different types of broker out there, right, buying, letting you buy one or two shares or even, commission-free trades, right, you can start with as small as like maybe $10,000 or even $5,000 account. So start small. Don't risk your full risk capital because at the start, you're going to make plenty of mistakes. Maybe instead of buying, you hit sell. Maybe you buy the wrong stock. You want to buy, say, Apple, AAPL. End up you buy another stock symbol which is maybe called AAP. You miss out the L. So really, start small. Make as many mistakes as possible. It's totally fine, right? When you ride a bicycle, you're going to fall a few times. When you trade stocks, you're going to make mistakes. You're going to lose money at the start. Same thing. So if you start small, right, your tuition fees is kept small, right? Why do you want to, pay, say, for example, $10,000 for a trading lesson when you can actually pay that same lesson for like maybe $300 or $400? So start small, so your tuition fees is kept small, and you have more money later on, right, to scale up your account when you're confident and when you're ready. Third thing, risk management first. So as you start in your trading journey, right, you will be overwhelmed. Trust me. I'll be lying if I say that, if the trading is simple. No, you will be overwhelmed. There is a lot of information out there and you probably will, hop from one trading system to the next. Maybe you'll try day trading, swing trading, position trading, mean reversion, trend following, momentum trading. You'll try everything and anything. But the one thing that you must not neglect is your risk management, right? You can try all the fancy systems that you want out there, right, till your heart content. But remember, your risk management comes first. Because think about this, right? If you have proper risk management in place, no matter what trading strategies that you trade, right, even if it flops, it fails, it profits, right, you will not blow up your trading account because each trade that you risk, right, is only 1% or smaller, right? So each trade, even if you lose, right, is just a loss of 1% to your trading account. It's not something that will destroy you. You can still live to, trade another day. So no matter what, right, emphasize on risk management first. If you want to explore the different trading systems and methods out there, feel free to go ahead, but don't forget your risk management comes first. Play good defense, right? Like Paul Tudor Jones said, right? I'm not sure what's the exact lines, but trading is all about playing good defense, and good defense. So don't forget that. And the last thing I want to share is that, look at what the index is doing. So for example, let's say you are trading the stocks in the S&P 500. It would make sense to track, right, what is the trend, right, on the S&P 500. Kind of to serve as a trend filter for you to know whether you should be buying or, staying in cash. So if you think about this, right, there's a saying, right, a rising tide, right, raise all boats. And it's pretty much the same for trading. If the stock market, the broad-based index is in an uptrend, chances are stocks will be in an uptrend. If the broad-based index like the S&P 500 is in a downtrend, is in a recession, more often than not, right, most stocks will be in a downtrend. So one way to kind of, improve your trading results, right, is to, trade along the path of least resistance. Look at what the broad-based index is doing, right, and then trade in the same direction of it. So one tip that I have for you is that if the S&P 500 is above the 200-day moving average, then you look to be a buyer, looking to buy stocks. If the S&P 500 is below the 200-day moving average, then you stay on to cash. You don't buy stocks at all because the strength, or rather the trend of the S&P 500, right, is not up, right? It's in a downtrend, or it's choppy. Whatever the case is, right, the 200 MA can serve as a filter for you to know whether you should be buying stocks or holding in cash. Okay, so these are the 4 tips that I have for you. There's a lot more, right? But really, there's no point trying to overwhelm you. I would say these are the 4, one of the most important ones that I hope take away from this entire stock trading course. All right, I know it's a lot that has been covered. Feel free to go through the earlier lessons and materials if you need to. And really, right, for those of you who now want to learn more about my trading methodology, my approach, right, what you can do is go down to my website over here, tradingwithrayner.com, right? This is my website, and on this website, this blog, I pretty much share everything I know about trading, right? So for example, we spoke about trend following earlier. How do you actually write the trends in stock? This guide over here will teach you how to do it, right? The ultimate trend following guide. It's free. Just click this orange button and I'll send it to your email address for free. And for those of you who want to learn more about technical analysis, price action, support resistance, candlestick patterns, then this guide over here, the ultimate guide to price action trading, is for you. Just click this orange button over here and I'll send it to your email address for free as well. Okay, so it has been a great time. I've enjoyed, right, producing this stock trading course for beginners. So if any feedback, questions, just leave it below and I'll do my best to help. So with that said, I wish you good luck and good trading. I'll talk to you soon.